If you guys are ready, I think we can go ahead and get started here.
That sounds great.
Okay. Welcome everyone to today's webinar on the latest information on PPP and EIDL funding presented by the U.S. Small Business Administration. Many thanks to our presenters, Jeff Boyce and BJ Rocky, for being with us today, and all the participants who have joined in, and to our educational series sponsor, Chemung Canal Trust Company. Please note this webinar is being recorded to share what we learn with the business community. BJ and Jeff will share their presentation with you, then follow with time for questions and discussion. Please use the chat to submit any questions during the presentation. And just a reminder, when others are speaking, to please keep your audio on mute to minimize background noise. With that said, I'll turn things over to BJ.
Thank you, Candace, and thank you for hosting this important program this morning to get out the accurate information about several of our programs that are now available to small businesses to assist them during this pandemic. There's actually, besides EIDL and the PPP loans, there are variations of those that I'd like to just bring your attention. First, the PPP loans are broken into first draw and second draw programs right now, and there's slight differences to that, and I'm sure Jeff will go over in detail after this. Then we also, as you know, have our disaster loan program that's open, our EIDL loan program, which is open for applications now. But a lot of folks are very interested, obviously, in the grant portion of that loan, the advance, as it has been known for before. And that is going to be rolled out in a much different fashion this time than the original advances were. And I know Jeff will go over the details of that. So pay particular attention to that. The advances are not open yet. They will be, we were told on a call yesterday that it's probably 2 weeks away before those are beginning to be rolled out. The other program that's new for this period is the Shuttered Venue Operators Grant that is still in process of being put together, and we expect to start seeing some information about when that will be available later this week. Just for your information, as we go, as information becomes available, I would recommend that everyone check our website, sba.gov/PPP. That website is updated in many ways daily with new information as questions become apparent on the new programs and how they're being implemented. So that would be your best source of the most current information, and I would check that rather regularly if you're anticipating applying for any of these programs, especially the ones that aren't up and open just yet. Also, if there's businesses out there that need help putting these programs, putting their applications together, I would recommend that they call our small business development centers. And they're there to assist you in doing that. You know, we can be available to assist in particular areas. Right now, our focus has been primarily working with lenders, trying to get them up to speed on the new technical issues of distributing these new loans, and that's been an ongoing process since this program opened up. The good news is, though, today that all types of lenders are now able to do PPP loans. Started out slowly to get a feeling for getting loans into the hands of most of the smallest businesses, veterans, women-owned businesses, and minorities early on, and now the program is open to all lenders and all small businesses. So with that, I want to again thank Candace and the Chamber for hosting this program. We hope that you'll find it helpful, and I'll hang around to the end to see if there's any questions that maybe I can assist with too. So turn it over to Jeff Boyce. Jeff?
BJ, thank you. And so folks, good morning. I'm also joined on the call this morning by my colleague, Howard Garrity. Howard is our economic development specialist in the Elmira office, and hopefully he'll join us for Q&A as well. So folks, this morning we're going to talk about the Economic Aid Act and the Paycheck Protection Program, and start by drawing your attention to that big number here at the top of the slide, right? So $284 billion in additional funding was authorized by the Economic Aid Act. And so we're going to talk about that, talk about the changes that legislation has made to the program. But I think it's important to kind of step back and just kind of remember, you know, the Paycheck Protection Program, all it's done. It's really been a tremendous lifeline to millions of American workers, businesses, and private nonprofits, including thousands of small businesses located right here in upstate New York. And to really make that point, if we think about the funding, so from when the PPP first opened in March of last year through August 8th, that was the initial run of the program. Here in New York State, we had 348,870 paycheck protection loans. So tremendous uptake, tremendous penetration of that program. But importantly, the funding, right? So those loans equated to $38.7 billion in funding that PPP has already brought to New York State. So that's fantastic. And now with PPP2, there's a significant focus on directing the funding to the very smallest small businesses and those in greatest need of new or additional assistance. And so as the economic restrictions continue, it's really critical that this round of funding reaches those smallest firms as quickly as possible. So we're now in week 3, but if we think back to week 1, we got off to that measured sort of a focused start, 60,000 or so paycheck protection applications were submitted by 3,000 lenders all across the country. And in that first week, $5 billion in funding was authorized. As we look back on week 2, last week, you know, lenders report the process is working really well. There's strong demand, as you would expect, from hospitality, tourism, restaurant industry type folks. And the volume has been steady. But what's different really is that we aren't seeing that mad rush like we saw last spring. So it's been a much more steady, kind of a focused ramp up of the program. So here are some key dates. I mentioned now we're in week 3. We started with that initial rollout of the program by providing funding first and foremost to folks that applied through one of our community financial institutions, the so-called CFIs. You see them listed here on the box to the right. And then last Tuesday, after the holiday weekend on January 19th, the program opened to all of our authorized 7A lenders to be able to take PPP applications. And then finally, the program will remain open as long as funds are available through March 31st of this year. Again, just to remind folks, you apply for a PPP through one of our authorized lenders. And if you're not sure where to find one, there's a great tool on our website. It's a find a lender tool. I've used it myself. It works great. You simply put in your zip code and it returns a map of your area. It kind of looks like one of those Google maps that has different pins that show you banks and credit unions right in your area that are authorized to take your application for a PPP loan. So that's the process. I do want to mention too, in terms of timing, that our agency has put in some additional front-end compliance checks this time around. So if you think about the process, excuse me, you go to your bank or credit union, you submit your application, they then take it and send it to the SBA, and those compliance checks will then take place. That might add a little bit of extra time in the process, and then once everything is good to go, it's assigned a loan number, those funds are earmarked, and then SBA authorizes the bank or credit union to disperse those funds to the borrower. So that little bit of extra time lag will be built in, and we want folks to know that it's normal. It doesn't indicate necessarily that there's any kind of a problem with the application, nor does it indicate that there's any lack of funding. It's really something that's a normal part of the process this time around, so that we can make those additional front-end compliance checks. So I thought we would start by just talking about, or kind of reminding ourselves, what the Paycheck Protection Program is all about. The good news is that, the foundation of the program really is the same. So you see here who's eligible and what does it provide. Basically the eligibility remains the same, but it's been enhanced. We'll talk about that. But I want you to remember that the eligibility is broad. So you can be the smallest of small businesses. You might be a sole proprietor, independent contractor, self-employed individual with a single employee, and you are eligible. But importantly, that eligibility spans all the way up to firms with as many as 500 employees, still considered a small business by our standards. So that's a broad range. You can be, really very small or very big and apply for funding. But also remember too that certain nonprofit organizations, so 501c3s and C19s, veterans organizations, and tribal business concerns are also eligible. Again, as long as these entities were in operation by February 15th of 2020. So just like before, this is not a program for startups, for brand new businesses, but rather it's for those that were in operation. So what does it provide? Again, it's a forgivable loan of up to $10 million, so a really substantial amount of funding. The term is 5 years. The interest rate is 1% because it is structured as a loan. You're going to a bank or credit union, you're putting together the application, and they're going to make this loan to you that is meant to be fully forgivable as long as you achieve the objectives of the program, which are to use 60% or more on payroll, 40% or less on rent, utilities, and mortgage interest. So the essence of the program is the same. And just to draw your attention to the bottom of the slide here, remember, no application fee, no collateral, no personal guarantee, and that repayment is deferred for 10 months so that you have time to receive the funds, use the funds, and apply for forgiveness. That is the objective. That is how the process still works. The amount of your loan is basically that 2.5 times your average monthly payroll. And remember too that payroll is your salary, your wages, your commission, and all the costs that you incur as an employer to provide benefits for your employees, leave time, group health insurance, or any contributions you're making for retirement. So all that gets factored in. And then similarly, if you're a sole proprietor, your average monthly payroll is basically 1/12 of your net income or your earnings from self-employment. So that's what's the same. Here's what's new, right? Lots of good stuff. So as BJ mentioned, the Economic Aid Act introduced this notion of a first or second draw, PPP. And so a first draw is basically for anyone who did not receive funding from the program previously. So for whatever reason, you didn't need the money then, or circumstances are different now. If you did not apply before, you can now. So it's back open and you can apply for a Paycheck Protection Program loan. Beyond that, the legislation also expanded the list of eligible entities. We'll talk about those, but now there are more types of applicants that are eligible. That's good. It also expanded those non-payroll eligible uses of the funds. And so a lot of the changes that we're talking about this morning were things that frankly folks asked about or maybe raised and brought to the attention of Congress and others from the first round. And what you see in this legislation is that they've addressed a lot of those things to really make a good program even better. So you can now use 40% or less of the funding on other operating expenditures, property damage costs, supplier costs, and worker protection expenditures that your firm incurred. And then finally, the Economic Aid Act created the option for a so-called second draw. So basically, a second application to receive a second forgivable loan under the program. And we'll talk about the eligibility criteria for that. So I told you that there's more folks that can apply, and here you see the list, right? So at the bottom, These are eligible entities that can still apply for a PPP. But at the top, check this out. Here are the new types of entities that are now eligible for a first or second draw PPP. So housing cooperatives, maybe not that common, but they're eligible. Destination marketing organizations. We certainly have lots of those in upstate New York, so that's great news for us. 501c6 organizations like trade organizations and chambers of commerce. This was, kind of an open question, that's something that a lot of folks asked about the first time around, and 501c6s were not explicitly eligible, but now they are. And finally, certain news organizations can also apply for funding through the Paycheck Protection Program. Here we see some information in a little bit greater detail on those non-payroll expenses. So operating expenditures, things like software and cloud computing, human resources costs and accounting needs, these are things that all firms are certainly encountering as they run their business. So these are now eligible ways to spend those funds to achieve that full forgiveness. Also, property damage expenditures to the extent that they are not covered by insurance. So unfortunately, over the past many months, there have been a number of public disturbances and other challenges that have occurred around the country, and businesses may have had to spend money to make some repairs or to protect or fortify or change their operations. And so if those costs were not covered by insurance, they're now eligible uses of the funds. Supplier expenditures, you see that referenced here. Again, that's something that many firms will encounter, a cost they have to pay for subcontractors and suppliers that are providing them the inputs for their production or their business. And then finally, worker protection expenditures. So think about all the costs that businesses have incurred to comply with federal or state or local standards, buying PPE, putting up different protective barriers, maybe configuring drive-through or curbside pickup or outdoor seating. Now, all of these uses of the PPP funds are eligible non-payroll expenses that enable you to achieve full forgiveness. And the recommendation here is, as it always was, keep good records, right? Because at the time of forgiveness, you'll need to demonstrate how you spent those funds and how you were able to achieve that full forgiveness. So let's talk about that. So some more good changes, right? So if you think back to PPP when it first came out, you had to use the funds within the so-called covered period, and that was originally defined as 8 weeks. And so the covered period begins immediately upon disbursement of the funds from the lender to the recipient, and then continues for a period of time. And that's the time period in which you draw down and spend those monies and essentially book those costs. And then at the conclusion of that, you apply for forgiveness. And so when the program first came out, that covered period was 8 weeks. And then, that was imperfect for a number of folks, and they asked for an extension or some changes. And an amendment was made to make that be either 8 weeks or 24 weeks. And so that was good. You could choose a shorter or a longer time. But I think now the legislation has enabled the program to get it just right, because now borrowers who receive the forgivable loan, the PPP, can select any time period between 8 and 24 weeks to be their covered period. So if you use the money and you're ready to apply for forgiveness in 9 weeks or 12 weeks or 23 weeks, any of those time periods can be your covered period. You have the flexibility to choose the time period that's right for you. Another thing that was maybe suboptimal last time was the fact that EIDL advances. So remember those EIDL emergency advances of up to $10,000. Those previously were deducted from your maximum PPP forgiveness. Now they are not. And in fact, there's a mechanism that BJ mentioned that we'll be going through to basically rebate those funds for all borrowers that did have them deducted from their initial PPP. So that's great news. And then finally, forgiveness, the applications themselves. So again, when the forgiveness application first came out, it was pretty extensive. There were a number of calculations and things to be performed, and there was a real interest in simplifying that process. So our agency came out with an easy version of the forgiveness application. That was better. It was shorter. And there were more attestations and fewer calculations, which was good. But there was, again, an interest in helping the very smallest borrowers. And so SBA came out with the third version of those forgiveness applications that was the most simplified. And that was something that recipients of funds of less than $50,000 could take advantage of. And so the good news now with the Economic Aid Act is that that bar for that cutoff point for using the very simplest forgiveness application has been raised to loans of $150,000 or less. So again, that's very helpful. And in fact, if you look at the statistics from the first round of the PPP, the vast majority of loans, frankly, were for less than $150,000. So this will really benefit a significant portion of folks that receive these funds. Okay, so I mentioned the idea of a second draw PPP, and here you see some terms. And what I hope you take from this slide is that it's been refined, again, as I mentioned, to enable us to help those firms that really are in the greatest need. And so the first criteria to achieve a second draw PPP is that you received a first draw, right? So you must have received and fully utilized or will utilize those loan proceeds by the time that you receive the second draw PPP. That's a requirement. And the amount of the second draw PPP is $2 million. So we talked earlier about the first draw can be up to 10 million. The second draw would be only 2 million. It's again calculated at 2.5 times your average monthly payroll, unless you're in the accommodations and food services sector, also known as businesses with a NAICS code of 72. And for these firms that, you know, as you can imagine, have been most significantly impacted by the shutdown and have had the greatest economic impact to their business, they can calculate their PPP at 3.5 times their average monthly payroll. That's important. That gives them the ability to receive a larger forgivable loan and get more funds and hopefully, you know, again, use that to keep their business going forward. So eligibility is more targeted. The loan amount is decreased somewhat, but it's a second forgivable loan. So who can apply? Again, as I said, you know, kind of basic criteria is that you received a PPP before and you have used or will use the proceeds of that for eligible expenses prior to the second draw being dispersed. That's important. But some other criteria here that are important as well. So the number of employees. So while for the first draw PPP, you could be as large as a business with 500 employees. Now for the second draw, that cap is reduced to 300. So still, you know, pretty good sized, but focusing those funds to even smaller small businesses. And then finally here, the last bullet is probably the most important. To achieve that second draw PPP, you have to demonstrate a 25% or greater reduction in your gross receipts by comparing comparable quarters from 2019 to 2020. And there's a number of different sort of methodologies or ways you can do that is spelled out in some really excellent guidance documents on our website, but that's critical, right? So you have to demonstrate that reduction in your gross receipts, but again, it's logical because we're directing this second forgivable loan to those businesses that have absolutely suffered an economic impact and really need these funds. So there's also great information in the guidance documents about how you demonstrate that, but basically you look to your business records. So things like quarterly financial statements, bank statements, your annual tax filings, these are the types of things that you'll use to demonstrate that 25% reduction in your gross receipts. And, here's where you want to get, work closely with your bookkeeper, your accountant, or perhaps one of our resource partners, an SBDC advisor, a SCORE mentor. They can help you go over your business records, find the ones that are really applicable, and make that case, demonstrate that you've suffered that 25% or greater reduction in your gross receipts. So that's the enhanced criteria. 300 employees or less, you've used the money from the first draw, and you've had that 25% or greater reduction in your gross receipts. So before we wrap up, I want to say just a word or two about two other programs. So one is EIDL, and BJ talked about this. So EIDL, Economic Injury Disaster Loan. As you recall, this was kind of the first tool in our toolbox when the coronavirus disaster first hit. We took this program that typically is used when there's a natural disaster. So think a flood, a hurricane, an earthquake, a fire. Typically, this is the program that goes into place when that happens. But instead, we were able to declare the coronavirus an economic disaster and use that economic injury disaster loan and open that up for folks that have been impacted. Again, that's a low interest, long-term working capital loan in terms of up to 30 years, interest rates of 2.5 or 3.75%. So that program was kind of first out of the box before PPP. It remains an option, as BJ said. You can apply for an EIDL loan today. The program was set to close at the end of last calendar year, but has now been opened back up for all of this year. You apply for an EIDL loan on the SBA.gov website. But importantly, the CARES Act created this additional feature of the EIDL loan program that was not a loan at all, but it was this EIDL emergency advance. It was this small cash advance of up to $10,000. And it was kind of meted out based upon $1,000 per employee increments. And so the good news is that the most recent legislation has authorized an additional $20 billion in funding for the EIDL Advance program. And it will be dispersed based upon, you see the two priority groups that you see listed here. So for any applicant that previously received an EIDL advance of less than $10,000, they will receive the difference up to that full $10,000. The second priority group would be for those applicants that applied for an EIDL and did not receive any funding. So the EIDL advance monies ran out while the program still continued through the end of the last calendar year. So there were some folks that unfortunately got nothing. And that's the second group that will receive up to that full $10,000 amount. But as you see here at the bottom of the slide, importantly, you don't need to take any action. So the good news is that we have records. So we know who all of those folks are, and SBA will automatically contact any of those previous EIDL applicants who got less than $10,000 or nothing and invite them to take advantage of receiving the full $10,000. To do so, they're going to have to meet some criteria. So first of all, they're going to have less than 300 employees. Second of all, they have to be located in a low income area, and we're building a tool to identify and confirm that location. And then finally, they'll have to demonstrate a 30% or greater reduction in their revenues over an 8-week period beginning on March 2nd of 2020. So that's how those $20 billion in funds will be initially allocated to those two priority groups who meet those three criteria. And then if there are still funds left over, I suspect the program could be opened back up to new applicants. So more good news there, more funding through the Economic Aid Act to provide direct grant assistance through the Economic Injury Disaster Loan Emergency Advance Program. The last thing I want to mention is the Shuttered Venue Operators Grant. This is a brand new program, right? This never existed at the SBA. Brand new program created through the Economic Aid Act. $15 billion allocated for the Shuttered Venue Operators Grant. You see the eligibility criteria listed here. It's the types of things you'd think of, movie theaters, zoos, aquariums, concert venues, talent reps, people that are in the business of doing things that have to occur with large live audiences. And as we know, those types of activities either have not occurred at all or have been dramatically scaled back. So these are entities, these are venues, these are organizations and businesses that have been so significantly impacted by the virus. And so now there's a new program to assist them. You see some information here. These are grants of up to $10 million, again, for entities in operation as of February 29th of 2020. So again, it's not something for brand new startup businesses. It's for entities that were in operation. So this is going to be a great source of assistance for these organizations. And we're not yet accepting applications for this program. So I just want to caution you there, but I want to be sure that folks on the call today are aware of this and help spread the word, or perhaps if they're eligible themselves, to begin to think about crafting an application. And so there's some much more detailed information on this program on our website. And again, that's sba.gov. And if you go to the website, there's an option you can select about disaster assistance or assistance for businesses impacted by the coronavirus. That'll take you to a page with information on PPP and EIDL and some other programs, including this one. And you'll see there some more detail to the application process and the eligibility. What you'll see is a phased application process that when it launches will enable those businesses with the greatest, most adverse economic impact to apply first. And it sort of will happen then kind of triaging or kind of in waves. That's how the application process will work. And so I encourage you to watch for future announcements about that program opening. And if you think this is something that is right for you, begin to prepare the information that you'll need for the application. Begin to put the materials together that can demonstrate that impact, that adverse impact to the economics of your organization. The other caveat I'll make is that with this program, you cannot apply now for a PPP loan and a Shuttered Venue Operators Grant. So a little bit of strategy there. You need to really think about which of these programs is right for your business. And so if you have a large number of employees or employee expensive, PPP may be a better option. Conversely, if you look at the way the calculations will be made for the Shuttered Venue Operators Grant, if looking at a percentage of your operations and your gross revenues is more appropriate, then this probably is a better fit. So keep that in mind. And then finally, just kind of some closing thoughts. So what to do now? So contact your lender if PPP is the right program for you. Again, it's your bank or your credit union. Get with them. Just as they did the first time around, the lenders take the sample application that we've created and they build a portal on their website. So you'll go to that website, you'll enter that information. If you're applying for a second draw PPP, know that you will need to provide your loan number from your first draw PPP. You should have that in your records. And certainly the lender that made that first loan to you will have that loan number. You see information here about lender match, and also there's that find a lender feature on our website. There's the more direct address here, sba.gov/PPP. That'll take you to a page with that information. And then finally, again, a plug for our resource partners. These are entities that are co-funded by the SBA and work hand in glove with us. So the small business development centers, SBDCs, that are typically co-located at a college or university around the state, and they're co-funded by them. SCORE, the SCORE mentors, also located all around the state. Many chambers host SCORE chapters. The Veterans Business Outreach Center, we're fortunate to have one here in the Capital District that serves our entire region, the VBOC, and then the Women's Business Centers. These are organizations that have expert staff that can provide counseling and mentoring. They can help you create or update your business plan. And because they are our resource partners, they're equally well versed on our programs, our services, and can provide great help in crafting successful applications for SBA assistance. So I encourage you to do that. Some other stuff here about our newsletter and Twitter, always follow us there. When the Shuttered Venue Operators Grant Program, for example, is open for applications, our agency and our district will trumpet that, loud and spread that information widely. So staying connected to our different communication channels is a way to do that. Finally, you see my name and my email address here. Don't be shy. If I can help, please send me an email address. I and all of the colleagues, our staff in the Upstate District are working, tirelessly to help as many firms as we can connect with the right resources and get the help that you need. So with that, I think we'll pause and we'll go to some Q&A.
Okay, Jeff, we did have a question in the chat here from Mia. She asked, what programs do you have for businesses such as landlords, LLCs that have been affected with the loss of income directly due to COVID?
Yeah, so, landlords should think about, either PPP or EIDL. Either one could be an option, remembering the difference. And also remember too, that you can apply for and benefit for both. Many firms, did in the previous round and may in the future. The Paycheck Protection Program is a forgivable loan. It's meant to be a grant, whereas EIDL is a loan that's meant to be repaid. Very different purposes, right? So PPP is meant to provide that infusion of funding primarily to maintain payroll so that you can pay your employees or so that you can receive your own individual sole proprietor income, versus EIDL, which has a different focus. That's meant to be an infusion of about 6 months of working capital, and it has a much longer time horizon. It's meant to give you potentially more funding to be used in a more planful way to kind of power out of the situation we're in now and make a plan for success in the future. So if you need to pivot your business, enter new markets, do some other maybe more structural things, that's really what the EIDL is meant to do over a longer time period than the PPP that's focused on that covered period of 8 to 24 weeks. And let me just ask if my colleague Howard Garrity is on the call. Howard, are you with us?
I am, Jeff.
All right, awesome. So I introduced you in the beginning. I want to be sure folks know that you're a part of today's session and that you are our resource in Elmira and the Southern Tier, and you can help answer the questions as well.
Thank you. And I'm sort of guessing that after this session ends, there will probably be questions that come about from some of the folks attending today. And I would just say, feel free to maybe send those to Candace. And, she can forward those on to me, and I would be happy to chat with anyone on a one-on-one basis.
That's a great recommendation. I think that's what we did from our previous sessions, Howard. That's a good point. So yeah, if you want to send them into to the chamber, she can bundle those up, and Howard and I and the rest of our colleagues will respond and get you some good information. Other questions?
So Mia had a follow-up, and it looks like it kind of follows suit with another question that we had in here from Julie. So Julie's question, she asks, can an owner take a paycheck if you weren't on a payroll for 2020 and have that count towards payroll costs? And Mia asks, what if you never gave yourself a check?
Yeah, so different ways to think about this. And again, I would point back to our website. There are two really excellent documents that basically describe how to calculate your first or second draw PPP. Now, they're rather lengthy. They're, 12, 18 pages long, but they take into account all the different scenarios and business types, again, from sole proprietors to partnerships and corporations and large firms with many, many employees. And they walk you through sort of, if you have this, then you do that. And so again, if you are a sole proprietor and you do not have employees and your payroll is essentially your income, you pay yourself from sort of the gross profits of the business, then you would look to calculate that average monthly amount. You might have both, right? You might have employees and take some kind of an owner's draw, and you as an owner might be an employee. So all of those different kind of permutations are possible. And if you look at that guidance document on our website, it'll walk you through that. And it'll get very specific and often point you back to your most recent tax filing. And it'll say, look at line blah, blah, blah of your tax filing. There's where you had a certain amount. There's an eligible piece. So take this plus this times that. It's that kind of detail that you can use to calculate the correct amount of your PPP. Similarly, lenders who are doing the intake for these loans, some of them have built similar sort of web-based questions that they take you through where you enter bits of information and in the end, then it calculates the correct amount. So lots of different resources out there. And then as always, if a business ever has kind of a specific question about something, a unique situation, reach out to us and we'll get an answer. We'll find the right approach for you.
Thank you. And we have another question with regard to the 25% reduction in gross receipts. Would nonprofits use fundraising losses to demonstrate that?
So, it says gross receipts, and that's really what they mean. So it's looking at kind of that top line in the aggregate, looking at that, sort of that maximum amount that an entity is using to take in funds from various sources. And again, there is some additional kind of a language in the guidance documents that provides some further precision, but that's really kind of the way you want to look at it. Sort of the funds from all sources. Looking at 2020 versus 2019, can you find a quarter where you suffered a reduction of 25% or greater? And again, there's some different examples of ways you can calculate that to try to give applicants the most opportunity and recognizing all the different business situations and firms kind of starting or stopping or whatever to try to find ways to achieve that. But that is the requirement, is that you show that 25% or greater reduction from that top line.
Thank you. All right, we have another question from Julie asking if, am I correct that everyone paid has to be a US resident? Our web store person lives outside the country.
That's exactly right. So we had that question early on. Sometimes there are workers that are, in a foreign country, which is great that we have businesses that, have, reaches far and wide, but for the purposes of this program, you're looking at only those US employees, folks that are based here, not in another country.
Okay. Thank you, Jeff. And that's it in the questions so far.
Well, let me just pause for a minute and invite my colleagues, Howard or BJ. Is there anything I missed? You guys are just as knowledgeable about all this stuff. Are there points that we should stress for the group or things you want to add?
I just might add that as before, these programs evolve as we move through to the March 31st deadline, and there could be changes that are going to occur. We don't know what they are or what they have. So if you're later on, if you're going to apply sometime based upon this information that we're passing out today is the best that we have. But our experience tells us from the past PPP implementation that, things that were unforeseen in terms of the implementation, in terms of the forgiveness piece, can change. So you need to be reviewing the changes or the updates on our website on a regular basis to get the most current information. Does that make sense, Jeff?
It does. That, BJ, that's a really great recommendation. And so again, thinking back to the kind of the first round of this and our experience with it, just as you said, as questions came in and there were things that weren't defined precisely enough, SBA would work to provide guidance. And sometimes it was another interim rule, but often it was through the addition of all these FAQs, which, eventually ran to be several pages. I envisioned that might happen again as the districts from all around the country are working just like we are with their constituents. And as questions come up that aren't exactly perfectly clear, the agency will work to define those things. And it could be through FAQs, it could be through a rulemaking, it could be through a guidance document, but as BJ said, the place to find that will be on our website, on the SBA website. So always go there as a first source of information on any of these programs. Howard, any thoughts from your end?
No, I think BJ made a good point, as you did early on in the presentation, Jeff. We have updates that come out sometimes daily. Keep track of our website, keep on top of that so you know what those updates are.
Other thoughts or comments?
Don't see any other questions coming in. Julie just said Jeff did a great job explaining explaining this in a way that's easy to understand. So great job to Jeff and everyone at SBA. You guys do a wonderful job with their webinars. The recording of today's webinar will be available on the Chamber's website. We also will send the link out to all of the participants today, along with a presentation for your reference, which will also include the contact information for the SBA, so you can contact them, or as they mentioned, feel free to send your questions directly to me, and then I can tally everything up and send it over to the SBA for you. So with that said, I think we're good to close. I just want to thank everyone again for joining us. Thank you everyone from the SBA for your great presentation today. And we'll just mention, if there's anyone on here who is not a chamber member and you're interested in membership, you can contact the chamber at info@chibongchamber.org or call us 607-734-5137.
Great. Well, thank you again to the Chamber. This has been yet another, really effective opportunity for us to get the word out on our programs and resources. We appreciate the partnership and look forward to continuing and working with you and your members on into the future. Thanks, folks. Have a great day.
Thank you, everyone.
Thanks, everyone.
Thank you.